financial institution in the world. It answered to no electorate, no parliament, no court. It was, from day one, a law unto to here. Then came the war. And this is the part of BIS history that most financial textbooks skip entirely. When Nazi Germany invaded and occupied Czechoslovakia in 1938 and 1939, the Czech National Bank had approximately 27 million in gold, equivalent to hundreds of millions today, stored for safekeeping at the Bank of England. The Czech government in exile desperately asked for their gold back. The Bank of England refused because the BIS had officially transferred ownership of that gold to the German Reichsbank. This wasn't a mistake. This wasn't a clerical error. The president of the BIS at the time was an American banker named Thomas McKittrick. He continued running the BIS throughout the entire war. German, British, French, and American banking officials sat on its board simultaneously, while their countries were at war with each other. The BIS received deposits of gold that historians later confirmed included gold looted from occupied nations' gold that had been melted down, restamped, and cleaned through the BIS's books. In 1944, at the Bretton Woods Conference, the meeting that redesigned the entire global financial system, Norwegian delegate named Wilhelm Kielhau stood up and introduced a resolution. He said, "The Bank for International Settlements should be dissolved." The resolution passed, and yet the BIS was never dissolved. Why? Because the American, British, and Swiss banking establishments quietly killed the resolution. They needed the BIS. And by 1948, the whole idea of closing it had been buried. No prosecution, no accountability, clean slate. For the next 2 decades, the BIS operated in relative obscurity, until 1971, when President Nixon ended the US dollar's convertibility to gold. The entire Bretton Woods system fixed exchange rates. Gold-backed currencies collapsed overnight. Currencies were now floating freely. Capital was moving faster than ever. And suddenly, the world needed a new kind of financial coordination. The BIS stepped into that vacuum. It became the permanent secretariat for the Basel Committee on Banking Supervision, the body that writes the rules governing how much capital every bank in the world must hold. Basel I, Basel II, Basel III. These aren't names most people recognize. But they are the rulebooks that determined whether your mortgage got approved, whether your bank survived a crisis, whether your pension fund was considered safe. Written in private, by unelected technocrats, meeting in Basel. Here's what makes the 2008 financial crisis so remarkable in the context of the BIS. In 2003, 5 years before the crash, the BIS's chief economist, a man named William White, published a series of internal papers warning explicitly that the global financial system was building dangerous imbalances, that the housing derivatives market was a catastrophe in waiting, that easy monetary policy was inflating a bubble that would eventually burst. He presented these warnings at the BIS E-Zone conferences in Jackson Hole, standing up in front of the most powerful central bankers in the world. He was politely ignored. Alan Greenspan dismissed him. The consensus view of the central banking establishment was that markets were self-correcting, that modern financial instruments had reduced risk, that everything was fine. In 2008, everything was not fine. And William White, the man who warned them, quietly retired to Canada. The system he had tried to warn was rescued using the same playbook the BIS had helped design: bailouts, quantitative easing, and interest rates pushed to zero. Fast forward to today, the BIS now has 63 member central banks representing countries that together account for about 95% of global GDP. Its balance sheet, over $300 billion in assets under management, making it larger than the central banks of most individual nations. But the money is almost beside the point. The real power of the BIS is standard setting. Because when the Basel Committee releases a new set of rules, Basel IV is currently being phased in every major economy on Earth restructures its banking system to comply. No vote, no referendum, no public comment period. Here's the parallel that should make you pause. After the 2008 crash, central banks around the world coordinated an unprecedented response through the BIS framework, slashing rates, expanding balance sheets, injecting liquidity. The global total of central bank asset purchases between 2008 and 2021 exceeded $25 trillion. That is not a typo. $25 trillion. Created, coordinated, deployed through a framework designed in Basel. And now, as inflation surged post-pandemic and central banks scrambled to raise rates in lockstep, economists began noticing the same warning signals. William White flagged, debt levels globally are higher now than they were before 2008. The BIS itself has begun using the phrase uncharted territory to describe where the global financial system currently sits. They are aware. The question is whether they will be listened to this time. So let's pull back and be clear about what we've learned. Takeaway 1. The BIS is real, legal, and extraordinarily powerful. This is not a myth. It's a documented institution at Central Bankplatz II, Basel, with over 600 staff and a legal charter granting it total immunity. Its power comes from the fact that the world's central banks chose to build their coordination infrastructure through it and never questioned that choice. Takeaway 2. Immunity from accountability creates predictable failure modes. The BIS's darkest chapter, its role during World War II, was made possible precisely because no government could compel it to act differently. The pattern repeated before 2008. Internal warnings existed, but the institutional culture rewarded consensus over correction. When you build a system specifically designed to be above oversight, you also build a system that can ignore inconvenient truths. Takeaway 3. The rules of the global financial system are written by people you didn't elect. Basel III rules on capital. Basel IV on credit risk. These shape the cost of your mortgage, the stability of your bank, and your savings. They are written by technocrats in closed meetings, accountable to no public. William White saw the 2008 crisis coming. He had the data and the credibility, and he was ignored through institutional inertia. The people at the top of the system had too much invested in the assumption that the system worked. Right now, the BIS is publishing warnings about debt, dollar dominance, fragility, and digital currency risks. Those reports are public. The question isn't whether anyone is watching. The question is whether anyone is listening. Welcome to our series on the hidden architecture of global finance. Hit subscribe so you don't miss our next episode on the IMF. Drop a comment below. I read every single one. I'll see you in the next one.